What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin. Hit that like button, subscribe if you want to see more content like this. Talk about crypto and charts every single day of my life, man. Even whenever I'm not doing it on here, I'm doing it for funsies. I've been doing technical analysis for over 7 years now. Going on 8. Soon enough, man. Soon enough. But hit that like button one last time, and let's get started. We're sitting at about $66,600 right now, and I can honestly say I was not expecting us to move up immediately like this. I thought we were going to take more time and go down. We had a nice rejection off this overbought area. I would have at least thought we'd go to the 60. That would make sense, or lower, but dude, this is a bullish reaction right here. We closed in the overbought zone. Now, some people might hear, we're overbought. The last time we closed in the overbought zone, we went down, right? Overbought means time to get out. That's not normally the case, okay? And I'll show you what I mean, right? For example, whenever you got overbought here, is your first time being overbought in a little while, you got overbought here. If you sold on the first sight of getting overbought, you would have missed out the whole move, literally the whole move. Back here, if you sold as soon as you got overbought, would have been right here. You might not have missed the whole move, but you missed a good bit of it, and it did continue to go after that even. Overbought here, first time in a while, right? If you sold at the first sight of that, you would have missed a big majority of that move, and the list goes on and on and on. We are just now getting overbought. With yesterday's close, we are just now getting overbought. Now, that doesn't mean that we're going to go sky high like this. It could. It doesn't, but it doesn't mean that. It just means that there's more to come. Likely there is more to come. We don't have bearish divergence. We've closed above the overbought zone. Last time we straight rejected off of it. This time we are wrestling with it. It doesn't mean we can't go down, but there's more significance that I want to talk about. And I actually recently talked about it in my most recent video talking about another crypto, Bitcoin Cash, comparing it to Bitcoin. But it closed above its 618 here at $65,285, the golden ratio, an area that we found resistance on. It's very common whenever you do this exact maneuver where you hit the 618, you pull back at least to your 0.5 and then move up, or more likely, more commonly, the 382, and then you pull up. You didn't even do that. You didn't even do that. You couldn't even do that, man. It's crazy. Maybe you did. Maybe you found resistance here and then moved down, but I would call this, I don't know, from a daily perspective, it certainly doesn't look like that. At any rate, you closed above it with above average volume. How do I know it's above average, and what do I define as above average? Well, I took the volume here and I give it a 45-day average. Okay, that's what that 45 is. If I double click it here, you can see that I have it with a histogram. I could put a line on it, whatever, and then that right there, if we're above that line, that means we're above average. I like the histogram. It kind of shades it. Anything that's below the shade kind of signals insignificance. Anything above the shade does signal it's a little bit more significant. It's not the most volume, but on a 45-day, a month and a half kind of average, it is above what we've seen on average over the last month and a half, essentially, is the reason why I chose 45, right? I think that is pertinent to the move itself. You could use a larger average, you could use a shorter average. Most people, I think, do use shorter averages if they use an average at all. Some people don't even use an average, but I like it because it helps me determine if a move is significant, right? Like here, you're moving up, cool. It looks legitimate for the time being. You had above average volume, but then you continued to move up with sub average volume. And then when you got above average volume, it was on your move down, actually suggesting that, hold up now, you might be moving down. It kind of validates it, right? Like, I don't know. That's how I look at it. Anyways, back to the main point. Closing above the 618 is a very big deal. That suggests that this move is stronger than we might be giving it credit for. Already moving down to your 0.5, moving down to your 382, that could signal a strong move still, but this is really strong. When you're consolidating right below your 618 like that and you break up not even like a week afterwards, I'm sure I'm not the only person that wasn't expecting it to happen this fast, but man, the next target area, we're sitting at about 66.6K right now. The next target area would literally be 68.9 to 71.17, right? $71,173, right, which is our previous resistance point up here, and even beyond that previous resistance point. The more interactions we have, which we've had several already with this zone, the more likely we are to break through it. And when we break through this 886, which is at about $71,173, when we break through that zone, it's quite literally at that, the next target area would be $80,600 to potentially $90,100, and we could move beyond that. Absolutely, we could. Again, when we break above the 886 at 71,173, not move above it, but break above it, which would come in the form of multiple days, 2 days to close above it, okay? 1 day to close above it, 1 day to open and close above it. That's what we want to see. Would suggest that this is all but guaranteed, right? Or I guess it is maybe not guaranteed, but it's about to happen. And right now we are on our way to interact with this zone. What this would call for breaking above the 618 immediately, the next target area is the 786 to the 886 fib. If we just tear through it, great, awesome. That would be great, not just for Bitcoin, but for everything. But I would expect that we probably do find resistance here as we have before. I just don't think it'll promote the same results. That's not my expectation. It could promote results such as this from the 886 down to the 786. We could consolidate and then break out. We could move to the 886 and then come back down to our 618 and then move up from there and break out. It could have a bunch of different formats than that more or less fit that same kind of narrative of bouncing between this resistance point and this support point. But what we don't want to do is close below, what we definitely don't want to do is close below that number, which is 65,285. And right now we're in that position where, just like the 886, we want to see multiple days close above it. We want to see today close above the 618. We can move below it, and that's okay. We can move below it. We could literally wick below it and then come back and close above it. That's okay. But we don't want to close below the 618. We want to maintain prices. And if we just keep moving up, great. The better that would be better. Again, the idea that we are up in the overbought zone right now, as bearish as it was last time, which is less common, but it does happen. Again, this is why we need multiple days, not just 1 day to close here. We need multiple days to suggest that we're not rejecting this area, but we have more work to do. If we look at the 4-hour RSI, the 4-hour looks very bullish in itself. Some people might ask, is this bearish divergence? What about the bearish divergence? I suppose technically it's bearish divergence, technically. Although I just feel like this is too far away, in my opinion. But it could be, because you do have lower highs, but and then higher highs, it could be. But if it is bearish divergence, then that would really only call for a move probably down to about 65.7K, because this bearish divergence that formed here already got fulfilled with this move. So a move down there, which is still above the 618, we could even move below that and be fine. So, and it is common most of the time to go a little bit below where that divergence formed. But as long as we're not closing a day below that line, I'm not worried about it. So looking at the 1 hour, and all in all, this 4 hour does look very bullish, even if we move down immediately. The 1 hour, it looks pretty bullish as well, but it could suggest that we move down immediately as well, like just to start the day off. It all depends, it all depends on what we do. If we continue to move up and we can get back overbought, then perhaps we do make a straight rush to that 69K area. Perhaps we go higher, but it remains to be seen. I'm really excited to see how this day closes and how the week closes, because that'll give us a better idea of what's to expect for the rest of the market for the coming weeks and coming months. Are we done consolidating? Are we ready for the next phase up? That could literally lie with today's close. That could be like beholden to today's close. So curious to see. There was something else that I wanted to talk about that I can't remember. I think it was this. No, that's not what I wanted to do. There we go. I want to go to the 123. It's a very long-term RSI. You've probably never seen someone throw up a 123 average RSI. But this bounce right off the 50, when you're below the 123, this is the 123 moving average. They correspond with each other very well most of the time. I say very well, but it's like 60 to 80% of the time. It depends. Sometimes more correlated, sometimes less. But generally how I look at this is if you're below the 123 moving average here, it's just a simple moving average. If you're below it, as we were this whole time, but you are above the 50 on your RSI, likely you will move up and out of it. Likely this is like a prime, it's an area to buy kind of signal, especially when you get a bounce off your 50 like that. That is a classic signal, and I wonder if we can find another example of that. We got a bounce off the 50 down here, right there, bouncing off the 50, and you were below the 123 moving average as well. Now you did creep your way up. It's a little bit of a different circumstance, but let's see. Right here you bounce off the 50. Right there, you bounce off the 50. I'm going to try to blow this up a little bit more. Bounced right off of the 50 line on the 123. You were below the 123 moving average, literally the perfect area to buy, and you had a very bullish reaction. Now, it didn't continue afterwards, but hey, if you were making a short-term trade off of this signal alone, very bullish. And the shape, the direction of the 123 itself also matters, right? If it's sloped down, that can add to the less likelihood, right? That 60% of the time or that 40% of the time where it doesn't happen, that could add to that, right? Not 60%, I meant to say 40%. Here you were sloped down, so the idea of bouncing off your 50 here, it wasn't as likely, but it still happened. It's not a perfect indicator, but it's more of an idea, and it tends to hold true. Here you were below your 50, you moved down below it, but you tipped your 123 moving average and immediately recovered. I mean, that happens too. Again, it's not perfect, but here, again, on a bearish note, I thought I just saw it at its 50. Was it not? I swear I just saw it at its 50. Maybe I had my line down here. But you moved above the 123. You were below your 50, showing that that's a perfect time to sell. You were above your 123 here, and you got above your 50. This normally would be a good look and suggest that you move higher. But if you looked at where we were timing-wise in the market, it wouldn't have suggested that. And if you used a shorter-term time frame RSI, you'd also have bearish divergence here, if I remember correctly. Maybe not bearish divergence, actually. But it's not perfect. Again, it's not perfect. Sometimes it doesn't work out. No indicator is perfect, but there are times that's the one flaw out of like 5 examples that I showed, right? So even if it is wrong like 20% of the time, that still gives you a pretty decent edge, and you can use other indicators to kind of correspond with that as well. I feel like there was bearish divergence on the 4-hour there, so that, you know, you could have used that, but from a high to a low point, rejecting the 50 is never a good look. It's not common. You don't generally find significance on the 50, but what I like to say, if I could just get it, come on, man. I'm going to have to move it in there. Come on, man. I'm messing with my flow. Come on now. Rejecting the 50. When you find significance on the 50, you tend to get significant moves. And you can see that you are being rather deconstructive by finding support on the 236, rejecting the 382, breaking below the 236. That should have been a signal that there was obviously more to come. And then also, you know, corresponding with that, let's see, you got below your 50 right here, right? Like on April, like that, getting below your 50 and getting back below your 123 moving average. And the 123 itself wasn't sloped up. There was a bunch of other things besides just the standard that I've been given throughout this whole video that would suggest that this wouldn't continue going higher. So, but again, that's just one bad example out of several other good examples where it worked out very well, very perfectly. And we're getting that signal now where we're bouncing right off the 50. We have consolidated for a long time in the long-term RSI. It looks to me like it's ready to move up higher. It really does look to me like it wants to move up higher. And where, if we go on the BTC, are we on Coinbase? Let's go to the index. If we look at this for what it's worth, specifically on the daily, okay. Let's go, let's see here. Kind of zoom it out. We had our cycle high in the overbought zone. Our next, and we hit the overbought zone a few times this first cycle because it was just manic craziness, but our cycle high happened when we were in the overbought zone. Our next cycle high, actually not cycle high, but a good stopping point in the cycle, a crazy consolidation phase, we dumped a lot, right, was in the overbought zone as well. And then here we are in our overbought zone as well at the cycle high. Try to blow that up so you can see it better. Overbought. Overbought here, we rejected it, but we got overbought here. That was the cycle high itself. Overbought right here wasn't the cycle high last time, which, right, that is the cycle, that is the cycle high area, but it was pretty near, right? 41K to 69. I guess it's not that near. You did have bearish divergence forming, and you didn't have as dramatic of a move down, but generally speaking, you do get into the overbought zone whenever you are near the end of your cycle is what I'm trying to illustrate there. And I think this actually just shows what I've been saying about Bitcoin for a long time on my channel, is that last cycle was just so weak, man. It was absolutely so weak. Crazy stuff. You didn't even get to your overbought zone. But anyways, I don't expect this cycle to be like last cycle at all. I don't think we're going to get a double top. I think a lot of people are trying to compare this cycle to last cycle, and I think they're going to be miss out as a result. But nonetheless, we are very far away from the overbought zone, even from a time perspective, right? Maybe not from a price perspective, but a time perspective here, right? We were about 92 days away from the cycle's end when we got into the overbought zone. Here, when we got into the overbought zone, we were a lot closer. Here, when we first got into the overbought zone, we were also a lot closer. It was probably like less than a month's time. Let's see. something like that. About, yeah, like not even a half month's time away from the cycle high. And here it was a lot longer, you know, so that variance in itself isn't really going to give us much to go off of. 53, 12 bars, 93 bars all the way over here. This one happened like very immediately, like pretty damn close. Something like 12 bars again. So, but however you want to look at it, even if it is the longest of 93 days, that is still pretty close timing-wise to the end of the cycle, as are, you know, especially these ones here where you've got two of them that are less than a half month, one that's like less than 2 months away from the end of the cycle. We're nowhere near the overbought zone, right? So we've got a lot of time. It does take a lot of time for this thing to move up. It moves up slowly, but even if we moved out a solid trajectory like this, absolutely, I don't think this cycle is going to end by the end of this year. I think it will be sometime next year. I think it'll be probably sometime at the earliest. I would expect April to potentially October of next year, but I'm just I'm losing steam, man. I'm losing momentum. I'm going to probably end the video there. I think Bitcoin itself is going to continue moving up. What we want to see, back to the main point here, from a high to a low, is it not going below 64. I'm sorry, not that one, from this high to low. As used to the weekly, $65,223. Oh, this is on the index. On Coinbase, it's different. You know, every exchange is going to have it differently, but essentially, you don't want it to move below about like 65,200, 65,300, somewhere around there. We want it to close above there. It can move below there, I should say, but it can't close below there on any given day. If we get that, if we hold this area of support, we will likely see prices around $69K to $71.1 thousand in a very, very short amount of time. And when we close above this 886 here, new all-time highs, baby. That's what that would mean. So if you like the video, hit that like button, subscribe if you want to see more. Thank you all for coming. I really do appreciate you. I'm sorry I got a little bit sidetracked with the 123 moving average. Again, it's not perfect. No indicator is, but it is rather simple to understand. And what I very much would recommend is not using it by itself. Use it to get an idea of things, and then look at the more regular kind of indicators that you might have in your repertoire, like the MACD, like the shorter term RSI, Fibonacci sequence. You know, there's all kinds of tools. There's pitchforks and all that stuff. Fib circles, which I don't know how to use fib circles, but and then just significant price points. But don't just use that by itself. Use it in tandem with other things, because that's when you'll get the best results. Okay, it gives you an idea. It should make you feel comfortable, right? Okay, we're not overbought. We have a lot of growth to go still. But then when we do get overbought, calm your nerves and be like, okay, is there other things suggesting that we're near the top? We might be near it in a time perspective, but maybe not in a price perspective. That was kind of the main reason that I wanted to address it, right? And I'm glad that we found a couple of examples where it wasn't perfect, because it is not perfect. It is absolutely not perfect, but it is something that I like to check to just kind of get an idea of things. So anyways, before I keep repeating myself, hit that like button, subscribe if you want to see more. Thank you all for being here. I'll see you on the next one. Bye-bye.